Hi, everyone, and welcome. The experts at ProTax Accountant have put this special briefing together because, honestly, we need to talk. There's a huge shift happening in UK banking, all thanks to new Bank of England regulations, and it's affecting business accounts just like yours. Look, the whole landscape is changing, and fast. Being prepared isn't just a good idea anymore, it's absolutely crucial for staying in business. So let's just cut straight to the chase with a really direct question. Could you wake up tomorrow, log into your banking app, and find your business account completely frozen? No access to your money and absolutely no warning? Well, the scary answer is yes. And it's happening to businesses all over the UK way more often than you'd imagine. All right, so how are we going to get you ready for this? We've got a really clear plan. First, we're going to unpack what we're calling the closing account crisis. Then we'll get into the juicy part, why the banks are suddenly running so scared. After that, we'll help you see your own account through their eyes, which is critical. And then we'll get to the most important bit, a practical, bulletproof plan to protect your business and what to do if the worst happens. So let's start with what's actually happening on the ground, because believe me, this isn't just some theoretical risk. For thousands of business owners across the UK, this has already become a very real nightmare. I want you to meet Chloe. She's a freelance graphic designer based in Shoreditch, probably a lot like many of you watching. She's great at what she does, her records are pretty clean, but one morning she gets an email and her world stops. She can't pay her suppliers, she can't pay for her software. A huge client payment just landed and she can't touch a single penny of it. Her entire business is paralyzed, overnight. The really scary part? This isn't some rare one-off story anymore. What Chloe experienced has a name. It's called de-risking. And what's so important to understand here is that this isn't about your local bank manager being difficult. This is the entire banking system reacting to enormous pressure. They're basically shedding any customer they think might be a risk. And here's the kicker. You can be a totally legitimate, tax-paying, honest business and still get caught in this net. It's not about being guilty. It's about looking risky. Which, of course, leads to the billion-dollar question, or, in this case, the multi-million-pound question. Why is this happening now? What on earth has got the bank so spooked? Let's take a look. Okay, so here's the best way to think about it. You've got the Bank of England and the Financial Conduct Authority, the FCA. They're the referees of the financial world. And recently, they've brought in a much stricter rulebook, especially when it comes to stopping financial crime. But they're not just giving out warnings anymore. No, they're dishing out massive, game-changing red cards, huge penalties that can seriously hurt a major bank. And when we say massive penalties, we mean massive. Look at this number. According to the Bank of England's own rules, the starting point for a really serious fine is over £125 million. And let me repeat that. That's not the maximum. That's where the conversation begins. When you see a figure like that, you start to understand why banks are suddenly so incredibly cautious. And this isn't just a number they plucked out of thin air. This table is a simplified version of how they actually calculate the fines. You can see it's all based on how serious the mistake was and how big the bank is. Now just look at the top right corner. That's the level 1 high-impact breach. And there it is again, over $125 million. For a bank, avoiding anything that could possibly land them in that box is now their #1 priority. Okay, so with that kind of pressure hanging over them, how does a bank decide who's a risk? This is where we need to put ourselves in their shoes and figure out what makes an ordinary business account suddenly start flashing red on their internal systems. So what actually sets off the alarm bells? While the FCA's own data tells us the story, by a huge margin, the #1 reason is a concern about financial crime. Now hold on, this doesn't mean they think you're some kind of criminal mastermind. It can be something as simple as a few transactions they can't easily explain. The other big triggers? Dormant or inactive accounts, and, crucially, problems with due diligence, which really just means their information on you is incomplete or out of date. This chart here lays it out perfectly. On the left, you've got the perfect student, the low-risk business, everything's clear, predictable, and all the info is up to date. But on the right, that's the profile that gives a bank anxiety. Unexplained international payments, out-of-date records at company's house, a sudden change in what your business does. The big takeaway here is that a high-risk profile isn't about being bad. It's about being unpredictable and poorly documented. Now, there are two little acronyms that drive this whole thing, AML and KYC. AML, anti-money laundering, that's the official rulebook the banks have to follow. But KYC, know your customer, that's the important one for you. That's the process, the paperwork, the ID checks, all the questions. It's how they decide how risky you are, not just on day one, but every single day after that. And if you think there's any wiggle room on this for the banks, well, think again. This quote, directly from the FCA, makes it absolutely crystal clear. It's not that banks don't want to be flexible. The rules say they cannot be. If they can't tick all their boxes for you, they are legally required to end the relationship. It is a black and white rule with zero room for interpretation. Okay, that was the scary part. We've seen the problem, we know why it's happening. Now let's get to the most important part of this whole discussion, the solution. How do you make your business account totally bulletproof? Stay with me, this is the crucial part that puts you back in the driver's seat. We boiled it all down into 4 key steps. I want you to think of this as a health check for your business's finances. It's all about having impeccable records, being proactive with your bank, knowing your own transactions inside and out, and just generally presenting your business in a professional way. Let's dig into each one. First up, and you have to get this right, impeccable record keeping. I mean, a clear, logical paper trail for everything. An invoice for every payment in, a receipt for every payment out. A huge flashing red light for a bank's computer system is seeing business and personal spending all mixed up. So keep them rigorously separate. And here's a pro tip for you. If a large or unusual payment comes in, don't wait for them to ask. Have the invoice and the contract ready to go, so if you get that call, you're prepared. Step 2 is all about being proactive. And the golden rule here is simple. Banks hate surprises. So if your business pivots or starts selling something new, let them know. If you move house, you absolutely must update your director's address with the bank and with company's house straight away. A mismatch there is one of the easiest red flags for an automated system to spot. It's a simple fix that saves a world of trouble. And that brings me to a pro tip that I really can't stress enough. Your file at company's house, it's not just a piece of admin. You need to start thinking of it as your business's official passport. The FCA themselves have pointed out how important this is. Banks are using software to check it constantly. If your details don't match up 100%, it creates an instant problem. Seriously, after this, go and check your file, make sure it's perfect. But what if you do everything right and you still get that dreaded email? Okay, the absolute key here is not to panic. There is a proper process to follow, and we're going to walk through it nice and calm, step by step. Right. First things first, take a deep breath and then call your bank. Calmly ask for a reason. While you're doing that, start gathering all your documents, records, communications, everything. The next step is to make a formal written complaint. If that doesn't work, you have the right to take your case to the Financial Ombudsman Service, who are completely independent. And here's a quick did you know for you. As of late 2025, the government has increased the minimum notice period to 90 days, which gives you much more breathing space. Okay, let's pull all of this together now. Let's talk about the expert next steps you can take to move forward, feel confident, and really take control of your financial reputation. So let's just quickly recap the absolute must-knows from today. 1. The pressure on banks is real, and it is not going away. 2. Your number one defense is pristine, transparent records. 3. That company's house file, it has to be flawless. 4. Over-communicate with your bank. Tell them what's happening before it happens. And finally, just accept that this is the new normal. Managing your banking relationship is now an active job. Now, before we finish, just a quick and important disclaimer. All the information we've shared today is for general guidance and educational purposes only. It should not be the sole basis for your financial decisions. You absolutely must consult with a professional expert before you take any specific action. And that, of course, is precisely where the team at ProTax Accountant comes in. Navigating this new world really does require expertise. So whether you want to get your records cleaned up, review your financial health, or you just need some solid advice, they are the people to call. You can get in touch with them directly on WhatsApp or by phone at 7985689912, or you can just drop them an email at info@protaxaccountant.co.uk. Thanks so much for your time.